Good morning, everyone. It's Trader Rob. Today is Wednesday, June 10th. Hope everybody's having a good morning. Hope everybody had a good trading day yesterday. I ended off having a really nice day of trades yesterday, and hoping to continue. We'll see how the market volatility here holds up this morning. I want to say I don't expect anything much less than what we've seen. We do have CPI numbers coming out in about 23 minutes. So that should be pretty interesting. I'm going to go over... let me get my... Let's get this guy ready. So I'm going to go over, after I go over kind of my... the market analysis here on the NQ, the ES, and the golds, we're going to take a look at this area because this looks really nice, really nice. But I'm going to show you a few little intricacies on this initial move to the downside. Okay, let's take a look at what we've got kind of brewing here today. So we've got key level sitting at the 29,848. These are all seller unbalanced volumes that we mapped out yesterday that did not get tapped into yet. We've got key level here at the 29,435 right here. This is an area that we definitely want to watch for this morning. Okay, this could be a very high reactionary zone right around the 29,435s. So again, this could be a scenario just like that. So this is going to be one that we definitely watch if price action can get up there. I'm sure it can. Another key level at the 29,140, another key level at the 29,095. And we've got our prior day low sitting down here at the 28,227. We do have our buyer unbalanced volume. Spoke with this yesterday to my signal members. This has been sitting on my chart for quite some time. This is strong. Okay, this is a strong area right here. So that's some terrible writing there, but you get the point. ES. Shrink this guy down just a bit. All right, so ES, we've got seller controlled volume sitting up here at the 75.32 to the 75.12. Key level 74.91, yesterday's high. We've got seller unbalanced volume sitting here at the 74.43 to the 74, let's call it 12, because the 12's got this key level. Again, this is one that we're going to want to watch. Kind of close, similar to where the NQ is going to be sitting at. We could see here a possible rejection and test these levels, key levels below us at the 73.90 and the 73.80 this morning. Below us, we've got a key level. Yesterday's low at the 72.47. We've got some buyer unbalanced volume. We've got a prior level here at the 72.25 that was never tapped into. We've got a strong area here at the 71.95 and another piece of buyer unbalanced volume sitting at the 71.81 to the 71.64. That's the ES. Gold. Gold, we've got a seller band sitting up here. Strong one. 42.45 to the 42.32. And thought we had a buyer band, but we don't. We've got another seller band. Yeah, that's what we got here. And another selling band here at the 43.89 to the 43.71. Now, you guys might be asking, Rob, how come you don't have more bands below us? Well, the issue is that with this new August contract in gold, I don't have any key levels, any bands below us right now. So I got to let price action kind of develop here. So that's gold. Now let's get over to the NQ and let's kind of identify this area here. What are some things that I really like about it? So if we just stick on the candlestick for right now. Again, I'm on the 2-minute right now. We had, as you can see, a very impulsive move to the downside. We did break structure down here. Great. We've got market bubbles showing a lot of selling pressure coming through. Buyers tried to retest, sellers held through, made a nice support and or nice resistance here, and then we're able to continue on this move. Now, this move, this secondary leg, not as strong, right? You know, we tried breaking structure to the downside. We've had a very hard time, so we know that currently buyers are kind of supporting this area right here. But the area that I would like you guys to kind of focus in on this morning is going to be this guy right here. Okay, so if we switch over, if we take a look at it through our AVT, which will simplify everything for you, I think it'll make your moves look a lot cleaner. We've got, just make sure that, okay, so now let's go a little bit further. Actually, let's start with this leg, okay? This was the second leg that I said was not as strong. So this guy, this movement right here, right? You could see how the buyers kind of came in here and really have made the sellers have a really hard time getting through here. So then let's dissect this little area first. If we go to the 120 range. Again, each one of these boxes is worth 30 points of movement. What do we see here? Okay, we've got, this is a kind of our unbalanced volume area. What do you see on this first move to the downside? Okay, was this first move, the base of the move, was it impulsive? No, it was not impulsive in nature, because you can see the retracement here to about 80% of the previous candle, right? If this was an impulsive move, this candle would have been something like this. Now, this was impulsive, and then they obviously started to meet resistance over here. Buyers started to step in and have kind of caused the sellers some issues here. So am I interested in this area right now? No, I'm not. So now if we go back a little bit further, okay, now what do we see? Now this is how you can kind of read the candlesticks, and you can read the footprints, and you can kind of come up with your own kind of I don't know, kind of your own little thesis here. So, and this is the way how I look at it. Okay, we had an impulsive move. Nice. We did break some mini structure here. What did the market have to do? What did the market have to do to continue on its move to the downside? So on this leg right here, we had unbalanced volume. Sorry, I should do this. Unbalanced volume from sellers, right? What did the market have enough of, did it have enough power to keep going down? No. It came right back into this unbalanced volume and continued its move to the downside, okay? This was the unbalanced volume area. This move right here was not strong enough. They had to come back in, retest, and then continue on the movement down, okay? So how I look at this volume, this has already been balanced out. Now, yes, are there going to be some pockets here of unbalanced volume? Sure, but not as strong as if this move would have been just a straight shot to the downside. So, and that's what kind of helps you filter out some of these movements that look really great on a candlestick. And don't get me wrong, this right here, this movement right here looks great. It looks fantastic. But there's some issues here, and you can see it on the candlestick. You know, we had a movement up, sellers stepped in, buyers tried to break through, and then we finally dumped. A lot of balancing out of volume right here. So that's kind of what I look for. I like to see impulsive moves like this right here would have been, I could already tell just by looking at the candlesticks, you can already tell that this is an area that had a very strong price action movement coming out of it. But like this candle looks great, but you could see that. So now again, if you were like a fair value gap trader, you would say, okay, well, I've got a nice fair value gap sitting right here. Let's take a short when we come back into here. Okay, that's the theory that some people have. Other people have, okay, this is an order block sitting right up here. Let's take a short from this area. Well, you also got to look at the context of the move. You know, this was unbalanced for sure. Strong move down, but it didn't break structure. It didn't break any unbalanced volume sitting here. Yes, we were able to finally boom, 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 do a lot of zigzagging, finally tried to break through and rejected. So to take a short right here off of this fair value gap, in my opinion, would be, you know, a losing proposition. And that's why so many fair value gaps fail. So I like to see, I mean, I can live on the footprint chart. I really can. It shows me everything I need to see. But you also could take a look at it on the candlestick, compare the two, and hopefully it helps you kind of build some context for the morning. Morning, Paul. Kevin, good morning. Steve, Keith, Joe, good morning. And I keep re-emphasizing all these points because, you know, the goal here is for you guys to be able to find these unbalanced volume areas easier on your own. And I'm going to tell you something. I'm going to probably say it a few times on today's stream. If you're in the green over this, let's just say over the last 30 days, you've done a hell of a job trading. This is a very, very difficult environment to make money because, yes, you can say the moves are easy. You know, when you're looking at it in hindsight, you know, this drop of, what is this drop here? 1,600 points. You could say, okay, I mean, there's no way to lose money here. There is a shit ton of ways to lose money here. You could lose money here on every single corner of this market, on this leg to the downside. Very, 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 very easy to do. And if you are position sized inappropriately, you're gonna get killed. Your accounts are gonna get completely destroyed. If you think that you can trade on normal size, maybe normal position risk, it's going to be very, very difficult. So even on this move to the downside, there is a shit ton of opportunities to lose money. And then when you're looking at a 2-minute candle, so all these candles here have the equivalency to 60 to 70 points on the 2-minute. I mean, you tell me. you're trading with an E-mini anywhere in here, you know, it's tough. Now, you guys have been seeing me trading this market with an 8 to 10 point stop, which honestly I think is extremely impressive in a market that we're in. You know, I watched the replay of yesterday's trades. Took a loser in the beginning for $900, and you know, the second that I hit the bid button, and I ended up taking a short. Within like you know, a second, price action had gone up and down like 6 points twice. Didn't tag me out. Went a little bit in my favor, came right back, tagged me out, went right back down. On the second trade that I ended up hitting the 40 points I took out in the NQ, you know, I replayed that trade. I mean, that was the same thing. I mean, I hit the bid market. I saw my flip, and price action immediately came back on me like 6 points, really close to stopping me out. And we finally got one little push out of my area, and quickly I went from a 10-point stop to an 8-point stop, left it there, and targeted those 40 points there. So, you know, it's but when you're in this high volatility type of market, those type of trades get really, really hard. And your focus has to be crystal clear. You've got to be able to react and make split-second decisions. And you guys see me miss trades all the time, and I kick myself. I'm like, or you know, I've got my finger hovering over. God, look at that. I mean, it's a 20-point ATM that I've got previewing on screen, and it looks like it's a few ticks. But what was I saying? You guys see me that, you know, sometimes I'll miss a trade. I've got a lot of shit going on, answering your guys' questions. I've got the signal group. You know, I'm taking a look at obviously different markets. I'm looking at the chat, and you know, your focus can wane just for a second, and a beautiful setup can appear. Maybe even one that you've been waiting for. So focus has got to be, especially in the market we're in right now. The market's not giving you an opportunity to really take that secondary second to think about the trade. Okay, sometimes you'll see me when we get into an area that I want to take a short from. For instance, let's say it's, you know, this area right here that we want to take a short from. We get our footprint confirmation. Perfect. It's a down candle. We get negative delta. Everything looks great on the trade, and you guys don't see me enter right at the end of the flip. Okay, I'm like, because the price action is not in a hurry. So if I can take that extra few seconds on the end of this candle and see if we get a slight movement down, or if we start to just retrace the move. Well, if we start to retrace the move, then I can sit out. I don't need to waste any bullets on that, unless maybe I can get a better price, but most likely I'm not going to even enter in on that trade. And then if it goes in my favor, yeah, I might lose a point or two on the trade, meaning that I might get in a point or two later in the trade than I would have normally gotten into. But the market's giving you a chance. It's giving you an opportunity to take that trade with a few extra seconds to think about it. In the current environment, you don't have that, because in a matter of seconds, the market could have already moved 20 points against you or for you. It's just the reality of the market. So if you've been struggling, you know, over this price action, I don't blame you. I think it's extremely difficult. And, you know, like I said, your focus has got to be razor sharp right now. And your decisions need to be split second. But the ultimate goal here is for you guys to be able to identify these areas, to identify areas that, you know, that should get some reactions to. And I'll say it again, in this market, if you're a pure price action trader, you're probably doing okay. There's been some reversals, some nasty ones that, you know, again, might hurt you, But as a pure volume trader right now, the market environment is a little bit difficult. But on the flip side to that statement, if you can stay afloat, or you could stay green during this type of price action, when everything slows down just a bit, you're going to become an extremely proficient trader. I promise you that statement. You will become a proficient trader if you can, because your focus will be razor sharp. You know what to look for. You know now what to look for in super high, fast moving markets. And when they show up in the slower moving markets, it's just that much more easier to really capitalize on. And we got news in about 3 minutes. $7.16, Trump to keep exerting maximum pressure to get a deal done. U.S.-Iran talks still continue, 7:15. Trump on Iran breaking. They've taken too long to negotiate a deal that would have been great for them. Now they will have to pay price. All right, here we go. 5 seconds here. Chart froze there for a sec. So that was almost a 150-point move right there. Well, let's call it 200 points. Origination of that move right here at the 40s to the 40s up here. It's 200-point candle in about 40 seconds. And CPI was absolutely nothing. It was exactly what they had forecasted. Pretty close to exactly what they had forecasted. So again, impulsive move like this, with no real news. They most likely retrace majority of this move here just for market efficiency purposes, but we'll see. Morning, J Loves. Morning, Steve. Rob, good morning. And again, nothing, you know, everything that I was talking about earlier, you know, it's not to discourage, it's to hopefully encourage things that we're doing right and things that are obviously very, very difficult in the market currently. And then again, it's very easy to get fascinated by this movement right here, because all this is going to look pretty good on the, you know, as an AVT strategy here or setup. Even though we're probably going to see balancing out of volume right here, we should see balancing out of volume right here. So without even looking at the 120 range yet, you know, you're going to probably see impulsive move, balance, balance, impulsive move, and then this balance, 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 impulsive move. So it's going to look, let's see what, well, the 120 just looks still, this had another leg here. Oh, it did. Yeah, this is 730. It's just everything happens so fast. This is all of that balancing out. No liquidity rates sitting right here, so you're probably going to see a lot of zero prints on your footprint right there. Market makers want nothing to do with that scenario. Once they start to see things getting more efficient, they will step back into the market, which gives you liquidity, and then you'll start to see your footprints showing a lot more data. I mean, I wouldn't trade this right now. Me personally, I would not. There's really nothing in that news as a catalyst, so maybe that it came in as expected. It's maybe a little bit more positive, but you know, this is, it's a tough little proposition right here. I mean, the ES to me even looks worse. You know, they are holding this kind of equilibrium area right here. They've got some liquidity that they can come swipe up here at the 73.80s and the 90s, so that could be a target. And Q's got similar targets above. Use the washroom real quick. Morning, Holy Earth. Todd, good morning. English, good morning. William, good morning. Okay, so on the weekly, things to look out for is going to be the 72.41 to the 71.99. That's the first real piece of buyer unbalanced volume sitting here on the weekly time frame. So this is going to be a super strong level. And then to the upside, we've got the 75.78, which they're going to need to make a... They would need to make a huge run for this, but this is all seller unbalanced volume here on the weekly. And on the NQ, we've kind of gone through all of these weekly bands. There is some new bands, but these are going to stay on because, again, when we come right back into them, you can see how well that they hold support right back into them. But on the daily, the closest thing to us on the ES is going to be that 74.43 to the 74.12. And it's got some key levels, though, to kind of deal with prior to getting into this this area right up here. And on the NQ, they've balanced everything out up until like the 29.200s. So there's really no good trading opportunity there. There are some pockets in above there. That's right next to a key level. Tricky. The NQ is tricky right now. I think the best play right now would be to Well, Latino, you just commented. I have no idea that you're on until I see a comment from you guys. I have no idea who's on. But good morning to you too, bud. That is right, currently. No setups currently. And I don't trust any of this price action right here. The movement to the downside, you can kind of just see it. I said to the 200s, which is right here, right? This is like the 200s. So if we kind of follow price action here, you know, you had a move, balanced out. You had a move, balanced out, balanced out. Impulsive move, it's been balanced out. All of this has been balanced out. We don't really have anything here that hasn't been balanced out already. All of this. And we just continue. You could then say, yes, around 4 o'clock in the morning, there were some opportunities here for sure. Here's unbalanced. They balanced this on this wick. This swiped everything here. This major move on the news, then again, balanced everything out to like the 29,000s. So like you really don't have much. There's not much here, you know, until what? I mean, it's pretty simple, right? And if you guys just heard me, I said there's unbalanced volume, but it's sitting right next to this key level right here. But these are the only two moves left that the market really hasn't balanced out. It's right here and right here. So that's why the 29,469 to the 29,416. This to me is a great setup. You've got a key level sitting right here on the lower part of this band. Looks very inviting, but price action is going to have to get there. Or I don't have a bias, no. Until I can start seeing it break through, you know, again, if we switch over to here, you know, if like the ES can, if it's going to break through this unbalanced volume area and continue to the upside, then yes, the buyers have a lot of power here. If the sellers end up breaking through down here, the sellers are continuing to have the power. Obviously, currently this is a downtrend, but as you can see, the trends have changed throughout the day, and we're talking about like 1,000-point changes, 800-point changes in market structure. So no bias right now. I never let a fellow Latino not get a hello from me. War and CPI will do that. Well, yeah, I don't even think it was CPI. To be honest with you, does any of the move make any sense? I mean, let's just be real. Does the 3,000 point swings up and down, or 3,000 point ranges up and down, does it make any sense over the last week? Has the headlines been anything crazier than what we've been experiencing over the last month? No. CPI came in average. This is that's why I gave you guys that whole I mean, rewatch the first 15 minutes of the stream, and it'll explain a lot to you. But to me, none of this makes any sense. I mean, how could you really form a bias when the fundamentals are still been pretty stable, or been pretty like just kind of flatlined? Yeah, you get some news on Iran. Goes positive news to negative news to positive news to negative news. But overall, it's all, I don't know, I think it's all bullshit for the most part. If anybody can explain to me the 1600 point drop and the catalyst for that. I'd love to know. Besides pure market manipulation, maybe some big movers wanted a position at the lows. Maybe there's competing big market players, because that's another theory that I've always wondered. I'm like, okay, we always talk about these major institutional players that come in with these iceberg orders, these huge positions that they need to distribute throughout the day. There's not one institution, there's hundreds of probably billion-dollar institutions that are competing in the markets. So do they all have the exact same opinion? Do they all have a round table where they come in and sit and say, hey, I'm going to take this huge share at this price. Nobody else come in because I want to, I want to make sure that this price goes in this direction. No, there's competing forces in institutional players as well. So it's, I don't know. It's crazy to me. I think so. So 9821 said, can we say it's designed to confuse retail, shake people? I don't think it's necessarily meant to design to confuse retail, because if you think about it, retail takes up less than 10% of the entire market. That's the reality. So when we talk about retail and we talk about confusing retail, retail is such a small dynamic of the market. It's not even true liquidity. I mean, it's a tenth of the pie of the liquidity. There has to be these huge competing forces, and it's who might have the better execution, who might have the more liquidity at any given moment, I think just drives the market. And then the remainder of the institutions that don't have a position on have algorithms, have analysts that are saying, okay, this group just came in, took on a huge position. Let's get on to their backs and let's follow that wave. For them to confuse, now, are they confusing retail? For damn sure. So the statement's right. I just don't think that the purpose of the movement from the big players is to confuse retail. Retail's confused, I think, on an everyday market. But when we get into scenarios like this, the confusion even grows even stronger. And again, this is where price action gets hurt. How many people FOMO in? They see this huge up candle. They wait. They see the retracement back down to right here. Then they see continued push. And they're like, all right, this is long all day long. You take a long on the break of this candle, which a lot of people do, and you get a 100-point move in a matter of a minute to the downside. Stopped out. And then all of these candles at one point were strong green candles. So you start trading in this area right here based on maybe FOMO, maybe some market technicals that are telling you that maybe a long's in play here. You got liquidity sitting up here like I described before. Here's liquidity, here's liquidity. Great target, should be a magnet for the market to come back down, to come up to. And all this time, you're just getting completely destroyed. I would rather be right or wrong in areas that I know are going to see strong reactions. And I'm just hoping that the edge turns in my favor and I catch more of those high reactionary. Am I going to get them all right? No, absolutely not. But when we do, we capitalize on them. Or at least we try. You know, if you were looking at the ES, maybe the ES would have told you, you know, the ES looks completely different on this opening candle, or I should say on this news candle, than the NQ did. You know, this right here would tell you, okay, the market doesn't really have a direction just yet. Yes, we've been in this upper hemisphere since the news have come out. So the bulls have, you know, have at least tried, but the sellers are still finding a way to create some resistance up here. But trading this right here, in my opinion, is tough. Holy Earth, I've never used Deep Chart. I would say it's the one platform that interests me the most. But they don't support Tradeovate. So for me, that's a hard pass right now. They only support Rhythmic, and well, they support several, but Rhythmic is their big one, and I think CQG. But majority of my props are all with Tradeovate, so for me, it's a no-go. But they have all the tools. I mean, you know, to get, I believe, I don't know because I really haven't reused it, and I'm sure somebody might comment on it. But I believe that my chart has almost everything that Deep Chart's going to give me. There's not much more that I really need. I've got the big trades indicator, so the bubbles. And I had to use a third-party vendor because the bubbles from NinjaTrader with the order plus I think is garbage. But so I have that. I've got the volume profile. I've got Delta. I've got the footprint. There's nothing more that I personally need. So there's really no need. I will say, I think maybe their order entry management might be a little bit better. Again, this is just from videos that I watch. I watch the same videos you guys do. And you know, Fabio's one guy that I watch. I think he's fantastic in this space. So, and I see how he enters into orders, how he's able to, like, you know, not manipulate his TPs, but how he's able to, like, modify them pretty quickly. I think it's pretty cool. But again, for the most part, I think the way I have my charts set up on NinjaTrader, I got everything I really need. You know, there's quirks. Every single morning, this ATR indicator that I found on the internet, I have to reload this indicator every single morning. For some reason, even though it's loaded on my, so like on my list of indicators down here, which I have 2 right now. I don't know why I have 2. Gotta get rid of that guy. Yeah. So even though it shows up on my list every single morning, or whenever I shut down NinjaTrader and I restart, this indicator's gone. It's in my list, but it doesn't show up on my chart, so I have to remove it and add it every single day. It's very annoying. But I have everything in, you know, and I don't like ATR sitting down at the bottom of my chart with a secondary panel. I like my charts to be as clean as possible. So I don't like that secondary panel down here. So this helps me out tremendously. I love this here. So I've got the things that I need. I've got my ATR sitting right here. I've got my footprints that, you know, I got fixed volume profile. I got profile. I got a volume profile sitting up on charts to the left of me. So not much more that I really need. Yeah, unless a platform comes out with like a magic 8-ball that's got a 80% win rate, that would be freaking awesome. And another thing I've noticed is that with every single like super impulsive period of time in the market that we see with super high volatility, we kind of create a new norm coming out of that volatility. So like if you look back at tariffs last year, like that was a big shocker to a lot of newer traders. I think it's traders in general. I mean, we were seeing 1,000-point moves in a matter of like minutes. It was insane. And then when that finally tapered off, we kind of had a new norm, you know, like ATR then was starting to sit at like 40 on a 2-minute candle, where prior to that, you were probably looking at 20 or 30 points on the ATR. You go back to like the previous big market destructor, which was probably coming out of COVID, or maybe during the middle of COVID, volatility started to really increase. And if you take a look at the norm that comes out of that, it's just a different playing field. So I'm sure once we come out of Iran and we come out of, you know, the gas prices, inflation, and we start to kind of taper off on volatility, we're probably going to still see a new norm where, you know, the ATR will still be increased. And I think that that's a design of the market. I think it's a design of the powers that be. You know, now you're just going to have algos fighting against algos, and, you know, who's got the most liquidity and who's got the quickest algos that can react to real-time conditions. Because if you think about it, do you think the algos are already programmed for a 1,600-point move on Friday that nobody was expecting, and that, you know, we were probably sitting in an ATR, a daily ATR of 250 points, 300 points that we've been averaging, and then you all of a sudden in one day you get switched over to, no, I'm sure the algos they all gotta kind of have to factor in what's kind of been going on. They adapt much faster than we do, but that's what the market's going to turn into. It's going to turn into algos competing against algos, and again, I truly believe that it all comes down to volume. It comes down to where the volume in the marketplace is at. Tiger Trades, I just sent you a Discord message because I was so happy about the AVT working out. Let's take a look what you got. Discord. Used your AVT entry, sniper entry, closed it now as I'm not looking at it, set it up and went shopping. Awesome. Let's see what it what platform is this? I mean, literally, we were just talking about deep trade. No, I don't think this is deep. Yeah, this looks like deep trades. Is this deep trades? What platform is this? Tiger? Nice trade, man. It's 250 points. Holy shit. Holy shit. I mean, and like I said, yes, it is deep charts. Okay, cool. I mean, 250 points, man. That's, well, then again, that was probably a 5-minute candle. That was crazy. It's crazy volatility. And, you know, again, if you join the stream late, I highly suggest you guys just rewatch the first like 15 to 20 minutes of me kind of giving some breakdowns on what I look for, why things as good as this looked right here, as good as this looked and this looked on a chart, why I did not like those, what I did not like of those trades. And the premise is simple. It's impulsive move, break of structure, unbalanced volume. That's it. And the unbalanced volume only comes because of step 1 and 2. It's a pretty simple concept. Let's see. Rob, does the volume profile indicator still conflict with NinjaTrader other indicators? So upstairs on my trading station upstairs, I still get a brush error every time I load NinjaTrader. On this computer down here, I do not get any errors. I am using the I am using the composite profile on I don't know, maybe 15 different charts. And I don't get any error, but I also do not have very limited on indicators that I have loaded on this PC. I don't have the position size tool that I used to use, that when I would get into an entry, you know, it would calculate already what my TP and my stop loss would be in dollar amounts. I don't have that installed anymore. I believe that that's what was causing the brush error. And I don't need that anymore because my my order entry management system that I use from Affordable Indicators, it already does that for me. So it already calculates what I'm going to make in points, ticks, dollar amount, whatever you want. So I don't have it loaded on here, but upstairs I still get the same error, so I don't think anything is... It's not like any of the recent updates or anything like that have helped. Yeah, so again, I'm still currently using the chart spot indicator. I've got it loaded up on 3.7, at least 15 charts on NinjaTrader. I don't get that error anymore when I load up NinjaTrader down here. But again, my list of indicators is, I've got an indicator for my bubbles. I've got my text on drawing lines. That's a big one for me. I got like my ATR indicator. And another thing I've been doing lately is if I don't use an indicator, I just remove it. I figure the least that it has to think, the better. And another thing too to always think about in NinjaTrader is if you've got an indicator and you just don't, and you have it loaded on your chart, but you're not, you have the visible. If you've got that unchecked so that you don't see the indicator for whatever reason, it's still calculating in the background, so it's still taking up some type of resources. The market bubbles do take up some resources, so these do take a good amount of time to load in the morning. Footprint takes up a good amount of resources. You know, and I have them set to 3 days. I don't have them set to, I just have them for, on this main screen. On all my other screens, I just have them set to load for 1 day. You don't need more than a day. But these take up some good amount of resources as well. Yeah, I contacted Ninja support. I contacted Chart Spots to see, you know, I don't think they ever responded to me on that. Or maybe they did, but I don't think the answer was... I think a key improvement on indicators, in my personal opinion, I would love for indicators to not be so dependent on the data series that they're run on. And I know that might sound kind of ridiculous, but like, I believe that if I put on a composite volume profile tool, you know, I should be able to set the days that I want to look back, or the sessions that I want to look back, not be dependent on the data series that might have 30 days loaded or 5 days loaded, whatever it is that you're loaded, because whatever days you're loaded is the data series that it's going to be using. Like, I like indicators like this, like the ATR indicator, that is not data series driven. I actually don't know. I mean, I watched the video of the guy who created it, and he said it took him a very long time to do because of how difficult it was. But I can dictate the ATR on whatever minute that I want, or whatever hour, whatever day. I mean, it's super simple. It's not data series driven. So if I go here to the ATR, to this label, I can select if I want the ATR to be based on the minute, the day, the week, the month, the year, whatever it is that you want. And then you've got a time frame value that you can actually put. So if I'm on a 10-minute chart and I load the ATR tool from NinjaTrader, it's only going to be on a 10-minute. I've got to switch the minutes to see what the ATR is. Here, with this indicator, it's not data series driven, so I can put whatever I want. If I want to be on a 15-minute chart with a 1-minute ATR, you could do that. That, to me, is the way to go. I don't want my volume profile to be driven just by my data series. Yeah, and I have seen on deep charts, you know, the I do believe that they've got a really nice delta volume map, and they've got a very nice volume profile map. And I mean, that's what you're just saying right there is a great feature, that, you know, you can tell the indicator to load 30 days, but only be on a 1-day chart or 30 minutes. And those are just some of the limitations on Ninja, unless you figure it out, unless you use AI and... So if you're asking me, Key, how long it takes for NinjaTrader to load. Okay, so I'm going to give you two answers on that. When I first loaded the computer, when I did a brand new install on NinjaTrader, which I've done it twice now on this PC. Forgot what caused me to do it the last time. Something was off. And I loaded the basic indicators that I need to trade from. So I had, like, you know, footprints, I had volume profile, did not have the bubbles and things like that. It would take me about 1 minute and 30 seconds to load the chart, meaning start up NinjaTrader, put a connection, which I always connect to live first, and then I connect my props. I don't know why I do that, but I just do everything in sequence that way. From this moment that I hit live, because that's truly when everything starts to generate, it takes me about it used to take me about 1 minute and 30 seconds. Now, the way that the way that NinjaTrader is configured with everything that I got going on, it takes me 3 minutes. to load back up and possibly take a trade, because even when they're all finished calculating, they get a little squirrely, like, meaning that, there's still like a little bit of lag. Like right now, I don't have any lag in any of my charts. So I would say 3 minutes. I would say by the 5 minute mark, you've got no lag and you can take trades without any issue. That's me personally, how my system is running. Damn, Todd, that's pretty cool. So Todd's trying to use AI to build his own app off of the available APIs from the different providers, working on footprint and chart. When you say build your own app, are you talking about like your own platform, like your own trading platform? Because that to me seems very daunting, but... All right, 4 minutes here for market open. You know what? Let me go get my new cup of coffee, and we'll be set for the market open. All right, it's go time. Let's see what the market open wants to look like. Again, some things to look out for on the ES. We've got these key levels up here at the 7380s. Some liquidity there that they can want to come after. NQ's got very similar scenario up here. Two key levels at the 29095 and the 29140. It's crazy because normally there'd be like a 20 point difference on my chart, but it's about 50. I think remaining news, we just got oil inventory report at 9:30 Central Time here, so about an hour. Well, my brother-in-law that is the equities trader, he paid for some type of AI trading agent as well, just to discuss trading ideas. It's crazy. He says so far the kind of like the levels that the AI agent comes up with just kind of re-emphasizes areas that he's looking at. It's kind of like having a trading buddy next to you. Morning, AP. Kind of strange not to see a market bubble in that first 2-minute candle here, or second 2-minute candle here. One little thing to note. I guess it's going to have a ton of them. But even the ES is a little lighter than normal. So one little piece of intel there. I know we've been talking about this on stream a few times, but like and I know nobody really has an answer to this question that I have, but I would love to know like the real stats on prop firms over the last, like, let's call it 2 weeks, or let's even call it last month, but more specifically, the last like 3 to 4 trading days in the market. I would love to have some type of insight as to, is this a time period where they're super profitable because people are blowing accounts, or is this a time period where they get hurt because, you know, you could take a gamble on a 20-point scalp on the NQ and turn it into a 100-point move to the downside or upside. I don't know why it interests me and intrigues me to, if there's a way to find out some real data. I know there probably isn't. I gotta agree. I mean, I think lately over the last like week, I've been, I don't know if it's just I think the day that we were looking at different influencers on YouTube, I've started to see a lot more different influencers that I've really never seen it before in the future space. I'm just kind of watching them, and a lot of them seem to be in the red. Some not. Some have been doing really well. But I just think overall, like, for instance, I just got an email from Take Profit Trader that for limited time, they're bringing back 40% off. 40% off plus no activation fee. And they just brought it back today. Now, you know, again, the way my business head thinks, I'm like, okay, well, it's one of two things. Either they know that a huge percentage of people are blowing accounts and they're going back to refill, and there's obviously competition between Apex, Take Profit, Lucid, Legends. There's so many of them now that now's a good time to run a promo to try to get back some of those people to them. And then the other side of my brain is saying, okay, they might be taking on more losses or on payouts, and they need to kind of refill the piggy bank with you know, a sale, because let's just say what it is. I mean, they run sales to drive business. That's the model, because now it's become so salesy, so discount oriented, that now if you're not running a discount, people are generally not purchasing evals anywhere near what the average price of it is. They're all waiting for that next best deal. And most props have figured this out to their own demise, because they kind of did that to themselves in a way. You know, if your business model is kind of built on the discount approach, and you start running discounts all the time, it diminishes the effect of the discount. And the timing of that Take Profit trader email, I just don't know if it's, hey, a lot of people have blown accounts, now's the time where most people are trying to refill, let's run a discount. Or, hey, we've got a huge influx of payouts that have come into the system. We need to regenerate some new income or some new revenue. Because that's the model. I mean, there's no other model that works. They have to make money from the eval activation to pay payouts. You know, unless they were truly on a strictly live prop firm, which none of them do. Well, they all have a live program, but they don't. That's not their single model. Yeah, and I get that model too. I get the, spend 40K to make the 140K. There's a few of them that, and I mean, it's a profitable model. You can't deny that. I think if my wife was trading even part-time, she would fit perfectly in that model. She would be the one that would say, okay, let's go full port, and let's, I'm okay investing 40 grand to make 150 grand. And that's a strategy. That's definitely yeah, and I do believe with Apex, Apex used to run their 90% off sales twice, 3 times a year. Now they're kind of stuck in this, that's just kind of seems to now kind of be the norm. But when you space them apart by 3 or 4 months, people don't have an option but to pay a higher price if there's a niche there that they really need. So, like, I believe Apex's model probably worked extremely well when they would run that sale 2 or 3 times a year, because at the during the rest of the year, during the rest of, let's say, like the collective 10.5 months, people were paying a higher price for the evals, and they had no choice. They had no choice because, they had a niche, they had a scalability factor with the 20 accounts. People love that, and you had no other choice but to pay a higher price, because you didn't know when that next 90% off was. It'd be months before they comes, and then when they need a huge influx, they want to get new traders in, a new influx of revenue, they would run a 90, and obviously I think it was a successful model. But maybe it's competition, maybe there's now obviously more competition in the market. Like the one firm that everybody always says is super profitable, Top Step. I would really like to see their I'd love to see their financials, like their true numbers. Like I can't imagine that they're anywhere near as profitable as they were 2 or 3 years ago. And I truly believe, I mean, I'm a very small sample size, but I truly believe it was if they would have kept the option of Top Step X and Tradeovate, I think that they'd be right up there with, Lucid and Apex as a number. I'm sure Top Step probably might be number one. I don't think they're number one. I was watching this guy. He does a really good video on prop firms, and he kind of ranks them based by like how their website traffic historically has done versus now. And Top Step had like one of the worst drop-offs in website traffic. Apex had a decline versus like Lucid had a huge increase. And there was one other one. It was a newer one, so it was kind of skewed because it was new. So that, but then when you look at the totality of the traffic, it's still Apex is like the behemoth. Top Step is still a behemoth. But like, I don't know. I think that platform issue, I don't know what it saved them, having an in-house platform. I mean, it's built off of TradingView, but, I'm sure that every time they license a Tradeovate prop account, they pay a fee for it. I mean, Tradeovate makes money off of that. And Apex has to pay that. And, Lucid, all of these companies have to pay for whatever platform it is that you choose. So by Top Step kind of making their own in-house brand, I'm sure that they have reduced that. But then on the counter side to that is how many people don't want to trade with them because of the platform. So it looks like we tapped in there into that key level there at the 29. So did the ES. So the ES and the NQ both tapped into that key level right there. All right, so we got some good comments in here. Taking a look at this little move right here. This is kind of the first piece of unbalanced volume that we've kind of created here, you know, 15 minutes into the market open. So that would look something like this. Pretty impulsive. Right there. Kind of cut that one up right here. So I wouldn't mind maybe taking seem to be a lot of consolidation right here though. We did sweep the lows here. Yeah, maybe worth a bullet here. Between this 28,902 and the 28,851. You know, ATR is at 70 again. So pretty similar ATR as yesterday. Looks like they trapped some buyers right here. You could just tell, I mean, buyers got exhausted up here and they just got absorbed right here. Trying to look at the bigger picture here too. So they did sweep a lot of liquidity right here. pretty balanced right here. Let's see if this is impulsive now to the downside or if we kind of step our way down here. So AP said, by the way, the new NinjaTrader update sucks. It's glitchy and I've had to delete. So I have not been super glitchy, but I did have some issue with an indicator. But overall, my experience so far has been pretty normal, minus that indicator issue that got resolved with the market bubbles. But I haven't really seen it be slower or any glitchier. I mean, you know, again, as I explained on the ES has got this area right sitting up here. This is going to be your seller unbalanced volume sitting between that 74.43 and the 74.14. Good amount of volume sitting right here too, so could see a little sweep here and retracement. And again, this would, you know, if the ES can break through on this area, you know, bulls are definitely showing some strength. And to the downside, this is well, got a prior key level here, but this is buyer unbalanced volume sitting at the 72.39 to the 72.17, with the key level sitting above it at the 72.47. So that's what's sitting kind of below us on the ES. ETR is currently at 73. And that's on the 2 minute. So I would think that the 5 minutes is going to be probably around 500. I mean, I'm sorry, 200. Maybe not 200, probably around like 170. You've got the 5-minute ATR at 105. So how is the 2-minute at 72? I got 72 here at the 2-minute. Let's see if that's... Oh, you know what? We might be on different... We might be on... I think this is on 14. A look back of 14. You might be on a look back of 10. Yeah, I'm on a ATR period of 14. Rob, let me know if you're on a different... Because if you're on 14 and you're at 105, then we're way... Something's way off, either on mine or on yours. Yeah, you're right. ATR is at 100. What is it on the 2-minute? 73. Okay, that's just weird. That is weird. Okay, so I was just wrong on my calculation, but yeah, we're both right. It's crazy when you see these what do we call this? The price ladder. I mean, the ladder's now 50 points. Usually my price ladder on the 2 minutes 10 points. Sometimes it'll drop to 5. Oh, that's a little better. I guess I gotta expand a little more. Still, even this little tiny thing is 20 points. I honestly don't mind if NQ doesn't want to go anywhere. Once it gets stuck in a range, I have no problem. In fact, I think we can maybe turn it into an extremely profitable day that way. For me, it's easier than a 1,000-point move in one direction without many retracements. And then the market shifts and the market gets into a completely different animal and then rips 1,200 points in the opposite direction, just blasting through all the levels. That's no fun either. Morning, chump sauce. Yeah, Tiger, that's for sure. One of the most important lessons to learn is when not to trade. So again, like for me personally, I believe that if the market comes back down here, I'm going to get a quick reaction. I mean, it's going to be fierce. We shouldn't see this here. It should come down and make this, or obviously this. Here, I'm a loser. Here, I'm a winner. And they could even do this in today's environment. It could do this, and I'm still a loser. Where I get in, we make a little move, stop you out, go. So, and that's why I'm saying that the market right now is definitely more of a challenge. But I think it's also training us to become better traders when the market somewhat normalizes. I think everything slows down, and you can hopefully see the moves a little bit better. Morning, Adam. Guys, if you haven't hit the like button on the stream, I would appreciate you doing that. So again, buyers attempting here, buyers attempted here, they got absorbed. Buyers attempting again, they got absorbed. And I would assume that this would probably be a flip somewhere. start on the 6. We'll start on the 120 range. Yep, right there. Again, it's just telling you the same thing the candles are telling you. Footprint right there, negative footprint, positive delta. AP had a great comment, and this holds very true. Prop firms get a lot of heat, but they taught me to be patient. So their rules, their consistency rules for the most part, you know, drawdown, goal to get a payout are all really designed in theory for you to really have some good trading habits. And I think that's the one area, you know, where you can really plug like Lucid's model in so well, because like the one negative on the consistency rule is that it really doesn't allow, depending on where you're at in your journey on your funded accounts, but it doesn't really allow you to capture like the big wins. You know, like if you let's say you've got a 40-point target, let's say you got a 20-point target, and price reacts really quickly, and you go to break even, and then you might want to stretch that trade out a little bit more. So let's say you take it down to 40. In today's environment, you might have a TP of 40, and you might want to take it down to 100 or 80, which is all realistic because that's within the ATR right now. And you know, when you've got 30, 20, 25% consistency, you know, those, it kind of hampers you on, you know, going for some of those bigger targets when you're already in the money. You're already, you know, either at break even, you can't lose money on the trade, or you might have secured a little bit of profits. Where, you know, on the Lucid funded, you know, that's why typically when I finish with my PAs and all of my groups, you know, like if I continue trading on with my single members, I typically now I have just switched over to my Lucid funded accounts and just trade that, because, you know, if I can catch a huge winner, like 100 points, 200 points, it doesn't affect me whatsoever. It doesn't affect my consistency score. There is no consistency with Lucid. So that's where, you know, there's where you get like a slight variation on the different models that are out there. But yeah, I believe that trading prop definitely forces traders to at least know that there are some habits there that they need to work on. Do most of them do? Probably not. Obviously, if majority of them are failing evals and funded accounts, it's just the reality of it. But I also got to imagine that the old percentage of 5% of traders are profitable. I got to imagine that that's expanded. That now is a bigger number, because the availability of good instruction, order flow teaching, risk management, I think with all the things that are kind of just beat into your head every day from every YouTube, every influencer, every single avenue, everything that prop firms are telling you to do, I think that range has got to have gotten has to have gotten a little better. So again, I think it's a good survey to do on what the real true percentage now of profitable traders versus unprofitable traders. Like I saw a video the other day, a statistic where like most traders quit trading within a 60-day time frame. It was like some ridiculously high percentage. I'm like, I don't know, is that true? But I think if I was to start trading today, my journey started today, I think I would be in a much stronger position of not losing so much money up front than I was five years ago, 6 years ago. Because when I started, like what we talked about the other day, the only thing that was the end thing was indicators, was, you know, plotting different shit on your chart and signals, these little signals that would pop up, and all that's lagging. That's all, you know, I'm sure they can work, but it was all indicator based. Now, I think the real focus of trading has moved into price action, order flow. So I just think that the newer traders right now, and including myself, if I was just to start today, I think I would be in a much better position to succeed sooner on in my journey than when I got in. Oh, sorry about that, single members. So what do you think? We're gearing up for something here, or market just doesn't know what to do? I mean, I think a viable area that we explore here today, I believe that we should get some price action up into this area right here. Yeah, these are crazy. I mean, each one of these candles is almost 100 points. 100, 90, 80, 80, 80, 70. So I know we were waiting for some stats to load up yesterday, and I think let's take a look at the let's take a look at TradeZilla here. Even TradeZilla's all been most of their stuff has switched over to AI tools. Alright, so this is what the month looks like so far. This is updated with everything from yesterday. So again, this number keeps creeping up, which is great. I love to see that. So we're almost at 1 to 2.7 risk to reward. So for every 66 bucks that we're risking, we're making 179. This number I need to get up a little bit. Again, there's a few break evens in there. So definitely got to work on that little aspect there. But as long as this continues to be in this ballpark, I'm okay. And once we get this up to like in the, why is this not doing? Once we can get this to like, I would think like around the 60% mark, that's when things should get super easier. I mean, to me, it just seems like it would be easier for the market to gravitate up to this the 29,400s. But again, I mean, there's nothing here for me to trade, so I need some extremes. You could look at possibly looking at a sweep from here from the 29,435s. We're probably going to get to the initial balance here. Only issue with the initial balance right now is that we're gonna be banging our head against it. At least that's what it seems like right now, unless we get some kind of retracement. But even the IB's been tough with this ATR. It's, you know, to capture something on the 30s really, really hard. And now, if I was really looking for longs here up until this, I'm not really a breakout trader. I have some continuation models. Let's see if this, I mean, that's a nice bubble right there. So let's see what the 120 showed us. Okay, so here you had a continuation, a nice one. So we got negative delta, positive footprint. And again, like if I had to bet on a bounce, my bet would come right here. I'm not going to take this one because of this right here. I don't like this consolidation that we had. We didn't really have an impulsive move out of there. But if the market wants to test for a bounce, this golden area right here would probably, oof. Yeah, so that's showing buyers got a little exhausted there. Yeah, actually, I'm not gonna even mark that out there. Let's see if they got the Let's see if they got the balls here to... see if the bulls got the balls. Morning, Nate. Tiger winning day is always a good day, man. Sometimes I don't even think that. Trust me, I say it all the time. I'm my worst critic. Oh, Rob, I didn't know you used TradeStation. How do you like TradeStation, man? I just do not like the platform. The studies, the configurations, I don't know, everything just seemed one step more difficult. I guess once you have all your charts set up the right way, their margins are not that great on futures. I love it. I hate it. Okay, so you're like my brother-in-law. My brother-in-law uses TradeStation 100% of the time, but he only uses the price ladder, the DOM. So, or they call it the matrix. So yeah, it's so you're similar to him on that. I've tried it with futures. I don't see the point. I guess I don't know. Maybe when the NQ is ripping, that ladder to me is just like, it's dizzy. It makes me dizzy. But he loves it. I actually don't even think that I have my TradeStation platform on this. Actually, I know I don't. Let me just see here. TradeStation T. No. I just have it on my computer upstairs. But my my TradingView is connected to my TradeStation account. So that's what I get my data feed from on my TradingView. I don't have enough margin. I don't even think I have enough margin for 1 micro on the NQ. I think I might have like $600 or $700 in this account. I haven't traded this account in probably 2 years. I could probably take a ES micro, but definitely not an NQ. I don't even know if they'll let me take an ES micro. I've used Tasty Trade, I've used TradeStation, I've used Iron Beam, and obviously Ninja Trader. And I think Ninja Trader just does the best of all worlds because the margins are good. Trading platform I think is good. It's got the tools that I need. So it's kind of an all-in-one for me. But the funny thing is that I think I have like $1,000 in Tasty Trades. I think I have close to $1,000 in Iron Beam. I have $600 or $700 in TradeStation. I should probably just consolidate those into one. Or I should probably just take them out and put it into my Ninja Trader brokerage. So big ranges, just one big range. You know, if we were trading strictly the AVT right now, we'd probably be doing pretty well. You know, it's kind of hard to, again, it's kind of hard to short for me right now here. But like here's a setup. Taps right into point of control, full take profit. You got another leg down. Doesn't hit your entry there. Another leg down. Probably would be in this trade here. I probably wouldn't be in until right here because this is the unbalanced volume. And that's where we're starting to react from. But again, for me, if I'm looking at context here as well, you know, kind of hard to just a short up here right now. I guess it's kind of hard to do anything right here, right now, in my opinion. You know, we're getting big ranges, so the AVT is going to look very, very sexy right now. But we're really not breaking structure with any authority, any which way. So that's just kind of the missing element right now. Oh yeah, beautiful flip right there, off the key level. Yeah, and kind of realistically, I mean, the 120 range is probably decent scalping. Like this is almost like a scalping range right now. Granted, you'd have to have a minimum of 30 point stop loss here. So. But at least it affords you some flexibility in such a high range. 60 would be your next best bet. All right, so now we're getting some price movement here. And what happened to my IB range? Where'd my IB range go? We loaded it. We probably blasted the IB right here. What happened to it though? Let's see if it's down here. IB range visible. It wasn't visible. I swear I thought I turned it on. All right, so we did pump through it there. Yeah, well, let's just look at the 60. Boom, 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 boom. Yeah, so no entry on the IB there. Okay. Nothing to worry about. On this little new, let's see if this band here on GC holds up. Again, we've got that key level right there, which I'm not a fan of unless we bounce off of it. Let's see what we see here on the 60. So the 60 is right here. This is the purple area right there. We're going right into it. We just went right into it. Nothing to do there. I wonder if we do get support here at the 29,095. That's kind of interesting here. Let's take a look at the 60 if we can. 095. That puts us right here. This is all balanced out. Yeah, that's tough to trade from there. Don't like that. Nothing super clear yet to me. The 120 did flip again, right here at the key level. And again, I would look for I'd be looking for a long down here. I'd actually be taking a look at a long from this key level here at the 095. If this candle here would have just been a solid body candle without this wick coming down, this would be a green light special for me right here. But to me now, this is just kind of all been balanced out. And then again, strong move to the downside. But we still didn't break any structure to the downside here. So not much for me to be shorting up here as well. Shorten from the IB. I mean, we broke a little mini structure right here, but not great. So let's see if we find something a little bit more A+. Let's mark out our IB low, which is probably way down here, 2250. Okay. All right, decent little move here now. What can we gather here? What can we gather here? All right, let's investigate this here. This is probably not going to be great, but let's investigate this little section right here. Actually, the better move might be right here where the first... Let's see. Let's take a look. Not super great. I like this movement here. So this is where I was marking off right here. We don't really have an up candle here. So base of this move's up here. How close is that to the wick high? 50s. It's about 50 points away. Let's just see what this looks like. Again, not great. Not great. Nice, and then ugly. Nice, and then ugly. Let's just take a look at the 60 real quick. Key level right there. Not interested. Not interested. And nothing here yet. Nothing here just yet. Gold just got into its area. Let's see if gold gets a bounce here. Q breaking down. The greatest base. I'm assuming that the 60 here is going to be a little, it's going to be a little ugly. All right, if we bring this down here to there, to there. Let's see. This is coming pretty quick here. Let's see if we get a flip here in this purple area. Oh, we got the flip off the key level. You son of a gunner. I kind of knocked out my TP there. Wee. All right, we had the right zone, just no real good entry. This would have been a good entry right here. But didn't get into my purple, which is why I didn't take that. And this price action is quick. Price action is quick, but we got the reaction where we wanted. They took that right back down to value area low. So that was good. That was good. This is just nutty, man. This is nutty. Go down to the 2 minute here. Actually, the 1 minute we might be able to catch a little bit more setups. They're just coming a little faster here. Real fast. Yes. 1 point is 4 ticks. And I got to say that nothing's telling me that this long here is still not a good trade opportunity. This just seems like kind of a big range, and I'd rather play, if I am going to play a long anywhere, I'd rather play the long from lower in the range. I know we've got this sweep here. We've got the IB sitting down here at the 28,772. They could come and swipe at. We're getting kind of aggressive here now. We're getting into this zone here. All right, wait for it. See if we can get to that purple. A lot of volume. Saw the volume tick up right there. Oh, I hit the... Where's my entry? Uh-oh. Uh-oh. Let's go, let's go, let's go. Let's go, let's go. Oh, stopped out there for 10 points. Got the flip right there, exactly where I wanted. So it was worth a shot. I needed about maybe a few extra points there on that trade. But again, that's what kind of comes with the So got in right here off of this flip right here. Right here. Had an entry. My entry took a couple of, maybe 2 or 3 seconds before it even appeared. Did get stopped out. We did get a nice reaction for probably a good 40 points. But it's tough. But we definitely gave it our shot. Could have maybe reduced. Let me see if I could have reduced risk. I mean, in this environment, it's really hard to do that, but I was right up here. No, I really had no opportunity to. Oh, I mean, it was practically on my. The risk was practically at the bottom, so this was a perfect. Not much I could have done there. My entry wasn't so terrible. It was probably 2 points above where I wanted to get in at. My stop, where I actually got stopped out, was pretty much exactly where my stop would have been at. So again, I'm trying to create opportunity out of a very small stop. And there's the, now we get the bounce. That's okay. I mean, we've got a shitload of bullets of ours for the week to try these low risk, high reward type of trades. All right, we could get rid of this now. So now what we're seeing is sellers really coming in here. So now let's see what kind of other opportunities we might be able to find. Seem to always be on that first trade of the morning. Always seems to be the toughest one for me. But as long as I can keep those risks between the 900 and 1,000 range, and my winners to be in that $3,000 to $4,000 range, we're not doing too bad. Let's see what's the 120, if it's saying anything here. This is kind of an interesting spot right there, actually. If they're gonna bounce, they would have bounced right here. They didn't. What else did they leave? So they left this unbalanced up here. Let's take a look and see what's going on up there. I didn't market order in. I hit the S button, so it got me in on at where price was, where I hit my button. But it just took a couple of seconds to fill. It's kind of nerve-wracking though. New. But a market order there would have probably, I'd have to take a look at price action, but probably would have got me maybe 6 or 7 points above where I wanted to get in, which would have then just increased my risk for a losing trade. Be right back. ATR is at about 80. Let's map this guy out right here. He's actually in a decent spot right there. Let's see. No, there's no clear break of structure. Let's just see if this looks convoluted. It does. It doesn't look great. I'm trying. All right, so we got IB low coming up here. We also got a ton of volume sitting big on the volume profile, sitting right here. I'll be honest, if I get into a an IB trade here, I think it's going to have to come off of the 60 range. I'm going to try to stay on my same ATM, but my target is going to be, it's going to be at like the 60s, so right around here. I know it's a big target, but around, let's put it right around there, on the 50s. And again, if we get a decent price movement off of it, if we get like 30 points in profit, I'll probably just go to break even and let the trade work. I don't think I'll suffocate the trade. I'm going to listen to myself. I'm just going to go on the 60 range here. There it is. Nothing there yet. Nothing there yet. Negative delta. Negative delta. Nope. Did not get it. Did not get the flip there. Nope. Still looking because we are. Ooh, that was a good flip. We just entered into that big volume piece. Just don't like this bubble right here. They absorb them. And that's a flip right there. Flip right. No flip there. I think I gotta give up on this guy. I really do see a bounce here. Buyers stepping in. It's tough, man. This is tough. It's gonna now go right to our... Got some good buying pressure come in there. Got the flip. This would have been a good entry right here. It was just too fast. I couldn't react to it. But this was a great setup right here. You got your buyer bubble come in, flip right here. Granted, I would have liked the flip to happen somewhere over here, but shit. All right, instead of looking at it from this way, let's see if we can possibly wait for a retracement, because I do like the shorts right here now, obviously. I'm just trying to think where we could get a retracement instead of trying to chase right now. Let's see what this looks like. And let's see what this looks like here on the 60 right here. Come on. Right there. Okay, a lot of positive delta here. All right, I'm going to take the short from there. And let's bring this guy down here just a bit, right in front of that bubble. Bring this go. Whoa, whoa, whoa. Oh, man. I was on the wrong ATR. ATM, I'm sorry. I got nervous seeing the 30 point. I got a little nervous there. That's not good. This trade most likely works out too from this flip right here. Look how bad the entry was. But this should hold here. This should hold for a pretty good short here. Yep. It's tough, man. It's tough with the tight risk. And we just got the flip on the 120 right at the exact spot. Same candle gave us the flip. Just needed a few extra points. I got nervous when I saw my 30 ATM up here. Just started dragging it down. I just would have held that a little longer. We would have got our full TP there. That was the spot. That was the spot to, instead of chasing, because I was thinking about chasing right around here. I said, okay, let's figure out a place where we can retrace. I literally needed about 3 extra points there. Get rid of this guy. All right, buyer showing some strength there. Let's see if they... No. Let's see if they defend right there. Pretty strong movement here right now. All right. Gotta give up on that one. So right here, I think we already looked at that one and wasn't a big fan of that. I was more fan of the purple area up here. This area, let's just see what this was looking like again. Somewhere in this vicinity. What's wrong with this? It looks really good. Let's see what the 60 is telling us up here. Oh, this is 60. That's the problem. It's the 60. Okay. Okay. Looking, just not wanting to force anything. I don't know how you guys doing. You guys up, down, green, red, flat? I've given up about 20, probably 20 points to the market. Maybe a little more than that. 10, 12, 22 points to the market already this morning. This was by far the, well, they were, I guess, looking at it, it's really unfortunate. This one got stopped out right here for a nice little bounce. Actually, we had a big wick here, but this would have been already a good 60 points. And then we took a short right here. That obviously got, we saw that one. That one got wicked out by a couple points. So a little unfortunate, but green today took a lot of paper cuts yesterday trying to play with a 15-point stop. Mixed, these moves are big. 20 points is nothing. Green, but I'm working on better discipline and just paper trading right now. Okay. Nice, Keith. Rob's up a 1R. Steve green. Keith in the Signal group. Great day. Hit max daily profit. I'm done for the day. Good job. Good job, Keith. I wish I was in that camp. I wish I was in the happy camp. I'm actually not unhappy. Took what I thought was there. Risk was semi-controlled. Now it was a little uncontrolled on that last short. I went in with the wrong ATM. Granted, that ATM would have gotten me like my 60, 70 points, but let's see. Yeah, 76 points. But woulda, coulda, shoulda. Try to see if there's anything sitting over here. Nothing good. I'm going to be honest with you. What's on my radar is the 2700s. Now, the one thing also to think about is that we truly haven't, you know, we were making lower lows, and then we pushed to the upside, but we really, until we break here at the 28,631s, I mean, the bulls are not completely out of this equation just yet. But I think we give this up. Let me just look at the volume profile here. What's coming up on the docket? Yeah, next piece of volume is at the 28,151s. We're at the 28,631. So we have 500 points easy to give up onto the downside here before it finds another really nice piece of liquidity. Nor do I need 500 points, but so they just keep bouncing right here. Let's see if this is clean. It's not. That would have been a nice. That would have been a nice little retracement back down, but they're not, just not clean. And that gave me time too. Not a positive delta here. Okay, and do like that. I think we give this one a shot here. Oh, no, no. Take me, take me, take me, take me, take me, take me. Take my entry. Okay, there we go. Give me some price action. Let's go. Give me some price action. Price action, please. Okay, let's go. Let's go. Oh, I gotta put... I don't want to put it up here. That's 18 points. It's too much. That's too much. But I feel like that's where it needs to be at. All right, I'll just go to break even here. Break even plus a point. Let's go. Come down. Come down. Come on. Give me that trade. One time. One time. One time today. Let's go. Don't stop me out. I probably took a... Oh. Well, my stop would have been right around here, so that was a good break even. Good flip right off of the area. I think we probably saw 30 points. 34 points. Which would have got me back in the... Would have got me back into the green for the morning. I understand that, but I was looking for a little more than that. And I had all the confluences too. That was a perfect little entry there, but like the market wants to do. Retest, retest. Shake them out. Shake them out. But very happy with my stop because, oh, I actually ended up taking a 1.5 points there. Okay. I don't know. It didn't feel like it, but... No, I would have only... I mean, again, the likelihood of it going to TP... Oh, shit. That would have stopped me out anyways. I mean, even if I would have kept it at the top of the flip, that would have probably worked out. I mean, it doesn't touch, but who knows with slippage. Who knows? This is just fucking nuts. Just nutty. Well, we found the area. We're damn good at finding areas. This feels super dumpy, man. Super dumpy. Oh, wow. A lot of flips on the 120s, too. But again, like, this is FOMO setting in right here. This is pure FOMO. All right, I'm gonna take a little pause, guys. Not done for the day, but take a little pause. So we got some news coming out. Trump renewing attack calls. Nothing I can do here. Nothing that I can really do. This is craziness. Craziness. Let's take a look at the ES. What's the ES got going on? Same thing here. This is just trapped buyers right there. Nothing super clean there on the ES or the NQ. I mean, our best bet is just to wait for retracement back up into this area right here. This is balanced out already. For me, the 28.830s was where I would have bounced. 88.30s, pretty damn close. That's where I would have seen the bounce. This might be a dumb question, but what is MCA? USMCA. Not looking to renew it, says Trump. And I know I could Google it, but if anybody knows what it is, put it in the chat. I'm gonna give it one more shot here. Oh, okay. I know it's not affected order. Let's go. Get out of here. I don't know which accounts are still in a trade, but let's take this guy down. See if we get a little dump. I don't even know what's active right now. Oh, there's got to be. Everything's already closed out. This is nothing. So all my followers got stopped out, but it looked like my leader was still there. And maybe one funded. All right, I'm done for the day, guys. That's close to 3R for the day, and I'm seeing the moves. I just don't have the proper stop for it. Let's just make sure. Yeah. No reason to keep putting pressure on the accounts. All right, guys, I'm done for the day. I will see you guys tomorrow. Hope tomorrow's a little bit better, but stay patient. I tried my best. I thought the majority of my entries I thought were pretty damn good. Now that I'm looking at this wasn't a flip. Here's your flip. This would have been the flip right there. Let's just see if we would have got knocked out there or if that would have been the trade. This was not a flip. Or where was it? Right here, where I got in. I saw positive delta and just kind of reacted pretty quickly. Let's see if we get a dump right here. So the true entry would have been right here. Might as well watch in agony. And if it stops me out, then, or if it would have stopped me out, then, all right, nothing more to do. All right, guys, I'm done for the day. I will see you guys tomorrow. Down 2,800. So gave back pretty much the profit from yesterday. 3R down today. Actually, no, my profit yesterday was like 3,600 bucks. So I'm still okay. All right, guys, I will see you guys.